All right, what is going on, traders? This is Alex from Boss Crypto. If you guys want access to our exclusive trading academy, we have opened up a limited amount of seats completely for you guys, 30 days. So head over to bosscrypto.co or just click the link in the description to get access to our free trial today. Hope you guys enjoy the video. So we're going to be doing a top-down directional analysis on BTC today. If you guys have stuck with us for a while, you know this is our kind of try and true method of analyzing the markets. We like to start with the higher time frames and then go down to the lower ones to get a big picture down to small picture view of what's going on here. So we'll start with the monthly, go down to the weekly and the daily, and then we'll stop at the 4 hour to get an intermediate term picture. All right, so let's get right into this here. If, like I said earlier, you guys have been keeping up with these for a while, you'll hear some of the same things, right? We bottomed right at the bottom of the monthly EMA formation bands. Okay, this bottom EMA is the 60, and you can see that's pretty much, it didn't exist at the time, but that's pretty much exactly where the last bear market ended, right? And so we bottomed right about the same place, and now we've had these 5 explosive months up after, with this one closing back above the 8, which is this blue exponential moving average. And if you see in this last bull run, once we closed above the 8, we did not break it on a close until it was over. Okay, so I would really expect this 8, which is right around 7,000 now, to be good long-term support during this bull run. All right. So we got the close above the 8. That was a really good sign. There was a key lower high on the daily that we took out. That was the first sign we're kind of entering a bull market. And then the monthly close above not only 6,000, but these key lower highs, right? The candle we dumped from, this lower high in here, right? We closed all above that, and now we're getting even more follow through. So obviously a lot of strength. Okay, if we take off log, for example, you can see, we just tapped the top of that monthly order block, as people will call it. All right, so that's pretty much just insane, right? We went from the lowest point of the bear market in 5 months straight up to pretty much not completely the old all-time high, but if we go to the weekly, which I'll go to in a second, you'll see how much time we spent above here was like maybe not even a month, right? So we went all the way back up to an area we've only been above, or sorry, misspoke there. We've only been above this area for a month, and we're right back pretty much higher than we've been for Bitcoin's entire history, right? So absolutely insane. We're on the right-hand side of this monthly cycle too. This is kind of like our runway. All right, so we want to be riding that until it's over. And we can see last time, let me turn the log back on, it wasn't just a cycle up, but it was a cycle up, a pullback to the 8 on the monthly, which it held, and then it just continued cycling all the way up until here. Right, so just because our cycle might get extended does not mean the run will be over, which means this really could be a run into late 2020, 2021. Who knows? All right, but that's enough for the monthly. Things to keep in mind: long-term support, the monthly 8, right around 7,000-ish. And as we've seen before, we can wick below the 8. Right, it's not the end-all, be-all, but I would really expect that to be a good place to hold in the long term. And the further we go up, the less likely I think a fill at 6,000 is possible. All right. Another thing to keep in mind, in the last bull runs, we've had 5 to 8 periods of drawdowns from 30 to, anywhere to 40%, sometimes even more, where we get these big moves up and then we get these big pullbacks on the lower time frames, right? We went to 3,000 and then we came back to 1,800. That was about a 40% pullback. Oops. And then, here we hit like 5K, went back to 3K, about a 40% pullback. So, at any point we top out, I think a 30 to 40% pullback is fair game. And you can see here, even a 40% pullback, even a 40% pullback would only be, 8,000, which is absolutely insane considering we were just at like 6 a month ago or something, right? So, like I said, it's not like we can't break, the 7,000 level, but more than a 50% pullback is starting to sound kind of hopeful for BTC. All right. That's all I'll say for that. Let's go into the weekly, get a little more information here. All right, just to even further show how insane this run-up has been, not just in price, but cyclically, right? And this is our timing component. We use a slow stochastic. We've gone from probably one of the lowest points the cycle has ever been, only been this low once, maybe twice before, to probably the highest the cycle has ever been and stayed, right? You know, we've only gone this high and stayed this high, like here, you know, over here, right? Like we've been really extended for well over almost 2 months now. Okay. And as we've seen with price, just because you're extended, really been extended since back here, but still rising, just because your cycles are extended does not mean your price trend is going to end. Okay. And I've been talking about this ever since really back here, that as long as price continues to do this, or, you know, some derivative of that, forming higher lows and holding them, then we're going to continue up. And that's all that's happened, right? We've just formed higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, right? Okay, so the best way to be making money the last few months has been longing the Bitcoin dips. Now, I've, you know, just being transparent, of course, at this point, I was definitely hoping for a deeper pullback. Likewise, when we popped up, once again, I wanted a deeper pullback. I've still been about 20, 30% cash a lot of this time in case of this big 20, 30, 40% drop, right? And now we've kind of gotten, you know, it's hard to tell on log, but this was already, you know, a pretty significant drop. When we hit the bottom, it was, about 25%. So we've already had a pretty significant drop. So I added about 5% of my cash there, or sorry, 5% of my account of cash there. And I'm still waiting for maybe, you know, a pullback to 9 or 8 to add in the rest of my funds, right? You know, start smaller, 5%, 10%, 15%, 20%, like that. And then if I miss out on some of the lower bids, that's fine. There'll be a pullback eventually. I'm not worried about buying if I have to buy 10 or 8 or 6 or whatever. I'm only worried about the percent gain on the way up. Okay. So, like I said, keeping in mind, a larger pullback could be in order. A cyclical pullback could also be in order, right? Both fair game, and also fair game to just stay extended for a while. So the most important thing we're going to see is focusing on the pattern of higher lows on the lower time frames, mainly on the daily. And we'll go into that in a second, okay? So looking at key support right now on the weekly, if you recall on the monthly, the 8 is a pretty key support region, right? If we look at that on the weekly, okay, that's pretty much dead center of our weekly EMA bands. So we don't like to think about really, you know, one specific spot where we're really bullish. You know, I'm not going to say it's going to hold 7,200 perfectly, because you know, this is not how I think about trading. I rather think of areas, right? And so then, you know, we get, for example, we got to 10.5 and I was happy adding a little bit of cash. But I didn't know it was going to end at 10.5. You know, it could have come down to 9, could have come down to 9.5, whatever. But we got a good pullback. I wanted to add some cash. We get a deeper pullback, I'll add more cash. And if we get an even deeper pullback, I'll add even more. But I'd say a pretty key pivot right now is, it's hard to see with this alert, but see that bearish engulfing candle on the right side, right? We had a really extended cycle, which is hard to see because of this damn plus sign. A really extended cycle and a pretty bearish candle. I'm going to move now just so you can follow this thought process, right? If we follow the bullish higher lows of each candle, right, just the bottom of the candles, or if we just follow those, you can see there was not a bearish one until right here, right, where the bottom of this candle gets taken out by this bearish engulfing candle. So that potentially could have been the end of this trend and taken us back deeper. But what happened the week right after? We had a bullish engulfing candle, right? This is bearish engulfing. This is bullish engulfing. Where this candle closed below the low of this bullish candle. Well, now the next candle closes above the high of the bearish one, invalidating it. And this is what we call a BCI, a bearish candle ignored, right? So the following candle's price action ignored the previous one. So that was pretty much flipping us right back bullish. And then lower time frames continued to make higher highs and higher lows, taking us higher. All right, so I would like to see that level around mid 7,000s hold. Okay, I would be adding a lot of cash if we got even to 8,000s. All right, now let's hop into the daily, arguably the most important time frame here. Okay, let's pull up our cycles. Really crazy volume coming in, guys. I mean, that on the volume of that high, what was that? That was the highest volume we've seen since the breakthrough 6,000. Right? I mean, that was the same volume that we got back here at the first time we touched 8,000. So we're getting even close to all-time high volume. So we're seeing some insane money come into this market. Now, people argue, oh, it's not new money, it's not institutional, whatever. Like, we don't know where it's all coming from or, who's doing what. But I'd like to think it's not just, institutions are FOMOing. I like to think institutions were smart, at least some of them, and they were buying all throughout here. And sure, maybe some are late to the game and they're driving this up, but also you got to think retail is late to the game. Maybe they're driving this up, or maybe it's just thin books. I don't know if you guys know about UTXOs, but there's about 20% of the current Bitcoin supply that's unspent for the last 5 years. Meaning for the last 5 years, 20% of Bitcoin in existence has not moved. Meaning there's people who hold Bitcoin that watched all this happen the last 5 years, all of it, and still didn't move a single coin because they're long-term believers. Perhaps they lost coins. They'll never be moved again, or whatever it may be. But there's plenty of people not touching their Bitcoin. So what does that do to the supply on the market? Well, it minimizes it, right? So if you look at the entire market space right now, there's probably only 5, maybe 10,000 BTC being moved and traded around each day. That's not a lot of Bitcoin, guys. And so when things get exuberant again, and if you consider this period of time, somewhat similar to the interest of this period of time, right? We haven't even seen the craze of new all-time highs. And I bet once that comes in, we're going to realize there's actually not even as much Bitcoin for sale as we think. But, that'll make the video is going to get too long if I keep talking about some of this. Let's get right back to the technicals. So what I was saying on higher time frames, right, is we want to focus on this pattern of higher lows. Okay. This is the first higher low after the bottom, right? That's where my partner and I hopped in for the first time again. And ever since then, it's just been trailing your stops, i.e. when we're going to exit the trend with these higher lows on the daily, right? And we're just seeing more and more pivot higher lows, right? The higher we go. Last time we made a pivot higher low at the daily, at the daily 8. Remember, that's the teal line, the 8-period moving average. Last time we made a pivot there, I bought some at 74. Most people were waiting for lower. I wanted lower for more of my stack, but I was happy to buy there. And I bought again here, and it paid off very well. And so I did the same thing this time. We got back to the daily 8, about a 20% drop. I bought some actually very well at about 10.5 on Coinbase. Right? And so this is, it's pretty much, I think it's the same as back here, right? There's still a potential for a bigger drop. I would like the bigger drop to get the majority of my cash position in there. And then the key risk I don't want to see taken out is right back at 7,400. This is that BCI level on the weekly, right? You see that? This key level here. That's the level I don't really want to see taken out, right? Because this is the higher low that led to this run up, right? So I'd like to see the buyers that came in here come in and do it again. Now, it's not like, long-term bearish or anything. We break that, but I will definitely be exiting some positions if we can't hold that level, right? Because remember, on the weekly, like I said, we do still have this really extended cycle. We're up to 14K from basically 3,000 straight there. So it's not out of the question to get a bigger picture pullback going into the end of the year. But, I'm still bullish. I'm a buyer here. I'm a buyer here until we break this pattern of higher lows. All right. So that's pretty much my game plan for now, guys. I bought some at 10.5. I'll buy some more between the 30 and the 60 on the daily, which is, I guess, between 8,500 and 10K. All right. So I'll split my bids up, into 3 or 5 bids and then spread them out here. And then a lot of my money, I'm waiting to see what happens because I don't like to keep a lot of my money on exchanges unless they're, like there's some that are insured by the US government and it's like, yeah, what does that really mean in the end? I don't know. But I'm willing to keep some on exchanges that are insured. So I do have some bids ready, but a lot of my money, I just want to wait and see what happens. Like here, I didn't buy this dip, but once it wicked and stopped, I bought right in. So, I like to wait and see what happens and have some orders, right? Kind of do a little split. Because then if we wick down here, I get a couple of fills and it wicks back up. Well, great. My average entry will be in here. Most of my entries will be up here, but those little bits I had down here will kind of bring my average down a little bit, as opposed to just holding everything and only buying after the fact. You know what I'm saying? So if we get a deeper pullback, great. If we don't, I bought some here. I'm still 20, 30% long. We actually, I issued a sell signal in the room pretty much. I mean, it was pretty much at the high. Like, I don't think we could get much closer. I didn't quite get to sell at the high, unfortunately, but, I think it was somewhere in here. I was getting a nice sell. I think it was like 12.7 maybe. But, and I didn't issue it because I knew a big dump was coming or anything. I just issued it because price looked like this, right? And we were all the way back basically to all-time highs. So it made sense to take some off. Now it makes sense to add some back. It'll make even more sense to add more on the dips. All right, guys, and we want to be trading around with these cycles, okay? When we get extended, maybe take some off. When we get down, add some back on. While holding pieces all the way up. If I bought 100% of my stack here and I sold 80% here, this 20% I'm going to hold on to for a while. Same here. If I added back 10% of my stack here and sold most of it, I'm going to hold some of it for a while until the higher lows break. Because think about it. How long could this go on for? How many trades could you make, right? And, you're not trying to hold for the mega moon or anything. You can hold some, like we talk about, but then you take profits moving up and you add back on the dips. And then think about that. You keep a little from this trade. You keep a little from this trade, keep a little from this trade, keep a little from this trade. And then by the very end, when we're at, 100K plus or some shit, you've still got a really strong core position. And instead of buying one Bitcoin and selling one Bitcoin here, you might have another whole Bitcoin from trading along the way, right? It's this idea of compounding, adding and reducing. That's what my mentor does. I'm still, I don't quite trade with every single cycle, but that's definitely the idea you want to be going with, where you have a core position and a trading position, and then trading with your indicators. I like a slow stochastic. It does a good job as far as oscillation and timing. People use the MACD, whatever. Point being, I want to be adding a little bit down here and taking a little bit off up here, right? And you'll see sometimes, like here, people be like, oh, you sold here, but now we're up here. Well, I did sell some here, and I also shorted here. And you know what happened? My shorts got stopped out right here, right? And we bought the dip right after, only missing out on a very small piece. Okay. Let's see. We'll go into the 4 hour really quickly just to show why I'm a buyer at the 8. I know this dip doesn't look like much yet, and like I've said a few times, we could get a deeper one, but let me show you why I'm a buyer here. Okay, so let's go down to the 4 hour, and you can see. Check out all this volume coming in on the dip, right? Our 4 hour slow stochastic has crossed back up. That's bullish for the short term. We had a Boss Crypto bottoming tail set up here. Okay, and that's where I bought as that was forming, right? So it was a little preemptive, and that's why I didn't add, 30% of my account or anything. But we were back at the daily 8. We're at the 4 hour bands. The cycle was coming down, right? So I bought a contrarian buy. And now I could come out of some of it, right? Because it's not guaranteed we're going to get follow through here. Could do something along these lines, right? But I'm okay buying some here. If this happens, I'll just buy more and then wait for, future price action. But we've had times, right, like this, where you hold the bands and we might break them later, but it could happen at a higher point than here. Right, so what I'm talking about is we could do something like this. We held here. Let's follow this 60, the bottom band. Maybe this rises up, or maybe price action does some higher low shit. and then we might break down. But we could stay above this pivot we made today, which is near 10,000, right? Imagine if we don't get 4-digit Bitcoin again. Are you prepared for that? Yeah, do you have a plan? I got a plan, right? Make sure you have a plan. And then we see what happened after we broke the bands. We went back to the 200, which is exactly what I was saying would probably happen. Break the bands, you go to the 200 and or pi. Same thing this time. I bought some here. If we break it, we'll go to the 200, which is around 9. I'll buy some there. And pi is right around 8.5. I'll buy some there. And that's how you do it. And the risk is really back below this region in this higher low. Okay? And then, I'm not going to, I don't want to make this video too much longer, but one thing to watch for, as BTC comes higher, this is a chance to buy altcoins, right? And then if you break that high, you want to step to the side. At least I'm going to, right? I want altcoins if we're going to do this. And at this point, okay, this is key, guys. At this point, when BTC tops out, we want to see this money flow into altcoins and not just into cash, right? What has happened here? Money went to cash, and that was pretty much it. Like, if you go look at most altcoins, they went down too. We want to see the opposite, right? For example, we go back to 2016. Okay, and we've got a somewhat similar situation. A huge explosive move, a massive pullback, right? Where alts pull back too. A big move up, alts die again. This is that key time to be buying altcoins. BTC fails at the high, breaks down, retests that high, and fails again. And this is when, right here, we see money go from Bitcoin to cash. From here, we see it go from Bitcoin to altcoins, namely Ethereum. How do we know this? Okay, well, we see Bitcoin goes down on the 12th of January, 2016. Let's go to Bitcoin, or Ethereum Bitcoin, on the 12th of January, 2016. Right there. Okay? So we get this big shift from money flowing from Bitcoin to just cash, instead from Bitcoin to altcoins. Right now, Ethereum's rising in relation to BTC as BTC dumps and chills. Okay, so that's what I am watching for as BTC potentially retests its high again. Okay? But I guess that's going to be all for the video. Don't want to make it any longer than it has to be. If you guys have any questions, feel free to post a comment in the chat, and I will try to get back to you as soon as I can. All right? And if you guys have stayed this far, if you really enjoyed this video, then I know you're going to fit in perfectly with our 350 traders and investors already in the academy. All right, so go check out bosscrypto.co or just click the link in the description or the comment section. Come check us out. I'll catch you guys there. Peace.